Okay. All right. Good. So now we're recording. All right. So again, let me just kind of start over. I just want to welcome you guys that are in the room for coming on board. Tonight we're going to cover a few basic things that you definitely want to know when you're going to be trading. I'm not going to go deep or heavy into the in-depth stuff because obviously that would be reserved for the persons who actually subscribe and the persons who are part of the private channel. All right. So if you are already part of the private channel, well, good stuff. Congrats. It's going to be a very, very interesting ride. All right. What we're going to cover tonight, just a few things. We're going to cover things like reading the graphs. We're going to look at things like covering trends, trend lines, and analysis, and how that can definitely affect your trading and why you want to be very, very careful when trading with trends. Also, we're going to look at different patterns, different chart patterns. I may touch a bit on different oscillators or indicators that you could use. One of my personal favorites, and kind of pretty much what works. Now, I'll tell you this: I really don't plan to spend a lot of time going into all the beautiful and wonderful and complex things that trading and the trading platform has to offer. That will just confuse you. The reason that a couple of reasons why I wanted to start this group, let me just kind of mention this before we even get into anything. I think it's really important. One, uh, for those most persons didn't know, few persons did know that I was trading, and I wanted to pretty much just do that, keep that silent, and just do my thing. However, there are quite a number of persons who've contacted me and asked me for assistance in this area. They've been asking me if I would be adding this to the cachet of things that our other companies do. Most of you guys that would be either in the room or watching this recording when it comes out, you're probably either part of Flow Money System or First Company or Sparta Funds, which is the most recent company that we would have launched online Bitcoin platform. And as you would know, I'm always someone who's looking to add new benefits, more features, pretty much just offer more value to to individuals and to members for when they're part of the company. So I think that this is definitely the right direction. I would have mentioned a couple good few weeks back, probably a couple months back, that one of the things that I was really pushing for with the companies was to have a large number of persons all together as one big family. And what we're doing is we're incorporating different income streams to generate income. And once we do that, then we can have a situation where persons can pool funds. And from pooling funds, we can then go into even different types of investment. All right. And that's really the aim. The aim is to get people not just empowered, um, but also to get them financially, get their incomes, financially better, for lack of a better word. And that's really the aim. The problem is there are a lot of folks who they get a lot of motivation from a lot of places, but they don't make money. They're not making money. And the aim here is to have folks making money. Plain and simple, that's what it comes down to. Someone's mic is unmuted. I'm not sure who the person is, but if you know your mic is unmuted, please put it on. Okay, so I found out who it is. Thanks, Keisha. All right. All right. So as I was saying, a lot of folks right now, they're very motivated. They get a lot of inspiration and motivation from a lot of different places. But the question really is, at the end of the day, are they making money? And if you're not making money, you know what? All the motivation that you're getting, that is gonna run out, and your excitement, your energy is gonna run out when the money runs out. And that's just the reality of it. After doing networking for 18 years, I can tell you for a fact, man. I know this stuff. I've seen how it goes with folk. Everything is sweet and dandy, but let me tell you, when that those funds run out, it's a totally different story. I know my video was around just now. I'm not even seeing myself. Are you guys still seeing me? right now. I can't even see my own video right now, but I know it's on. Are you guys seeing me right now? Just let me know in the chat if you can still see me. Because I can't see myself. Yeah, you are? Okay. Well, I don't know where it went. I guess I'm somewhere wrong. It doesn't really matter. It doesn't really matter. Yeah. So as I was saying, a lot of folks are not making money. That's just the reality. Just keeping it real with you guys. People are hurting, people are broke, and they're looking for a way to make money. Now, from that being said, one of the other reasons I would have started this platform and this movement is simply because a lot of persons seem to have an interest in trading forex, and I believe it's mostly because they're seeing it mentioned quite a bit online, on social media and so on. So they're seeing this stuff being mentioned on social media. They're seeing it all over. They're hearing persons giving testimonies and talking about um, how their lives are changing and they're making money and so on, and that is fine. I have absolutely no problem with that. Now the thing is, though, unfortunately for a lot of persons, they cannot afford to maintain the fees that are associated with the training and information and tools. So we've got a lot of tools out there. Some, not that great. Some pretty good. Some not that great. Um, Pretty high cost. But then you've got subscriptions that are pretty high as well. And I'm not just talking about companies per se. I'm talking about even just access to certain groups. Costs hundreds of dollars. Um, you know, just to get access. So the thing is, you want to have something that folks can actually realistically get involved in and see some benefits. All right, that's what we're looking for. Now, my thing is, if you can help a couple people generate even an extra $400 or $500 a month, even, I think we've done a good thing. But let me ask you guys this question, as we're gonna get into some stuff here right real quick. But let me ask you guys a question. Uh, Based on what you've seen in this industry and what you're hearing about it, I want you guys to put in the chat right now what your target goals would be. What kind of money would you like to see yourself earning per week from this initiative that we're starting here right now? I want you to tell me. I want to see the figures. I want to see what you guys are thinking. I want to see how your minds are working. I want to see what your targets and your goals are. What are you aiming for? What kind of money would make you feel like you're achieving some great results? And this is per week. Okay, so I see $1,000 per week. All right, from Keisha. Let me see anyone else. All right, boom, $2,000 per week for now. I like that, Jam. 2,000 US for now. Okay, so we got $1,000 per week, $1,000 per week, $2,000 per week. Okay, awesome, awesome. The thing about it is it's very possible. I mean, that is so realistic. It is crazy. All right, it is crazy. But let me give you guys a couple of things. Now, like I said, tonight is going to be pretty informal. I just want to highlight a couple of things. I'm not going to go deep tonight at all, and I don't want to go long at all. One of the things that you got to understand about this industry is it is extremely high risk. All right, it's extremely high risk. You guys would see when you join the group, and you go to the pinned messages, you would see that I've got a disclaimer there. I'm just letting you know up front. This thing is high risk, and you can lose a lot of money real fast. Um, Based on how you trade, you can see yourself go from $200-300 into negative in a matter of seconds, literally. Right? If you call a trader off, you do a trader off, you mess up. So this is not the kind of thing you want to play with, especially if you're going to be trading with real money. It's fine and dandy when you're using a demo account, because with the demo account you're using fake money, so it really doesn't matter. You're using fake money. But if you're going to be trading with real money, trust me, you wanna make sure that you follow the rules. All right. And if you're taking notes, for you guys, if you're taking notes, I'll just off the top of my head give you a couple of things that are really important. I'm telling you things that I myself would have learned when I first started trading. I made mistakes as well, like anyone else. I lost money. I lost a lot of money, thousands of dollars. There are other traders up there that, top traders, and they've lost thousands of dollars. Just talking to a friend of mine, well, not really a friend, but another trader. And just last week, he lost $75,000. That was just that day alone. That was just that one day. He lost about 75,000 US dollars. So, I mean, hey, you can get hit hard. You can get hit really, really hard if you're not paying attention, man. So I will tell you, and for sure, if you know you're not going to take this seriously, um, don't even start. Don't If you know you're not going to take this seriously, don't start. Don't waste your time. For sure, don't waste my time. All right, for sure, don't waste my time. All right. Another thing I will tell you is you got to be patient, man. A lot of folks get involved in this industry, and they go online, they watch a couple YouTube videos, and they read some stuff, and they come out like, hey, I got this, I can trade now, and they go up there, and they get hammered, and then they come back crying. I know one lady, she got in, and she put just a few $1,000s in, and she was all gun ho. She was just crazy excited about it. She got in, she got hit. She got one loss, one single loss, and that one loss just wiped her, and she was done. That was it. Yeah. So, so you gotta understand, man, that you gotta have some serious patience in this. You gotta be willing to be in the negative and remove your emotion from it, and not jump out and close that trade, because that trade could swing back and you could end up in the positive. But because of your emotion, you jumped out and now you're down. You know what I mean? So you gotta watch things like that. Anyhow, real quick, let's look at some actual charts. And this is actually live. This is actually a live account that I'm actually in right now. This is one of my accounts. I've got multiple accounts. Um, and I also have folks that I'm managing their accounts for them. So I'm actually doing trading for them. Um, Not something that I was really looking to do or to get into, but you know, a lot of persons out there that really want some help, man. And you know, once they understand the risks, that's my thing. Once you understand the risks that are involved, uh, then you know what is what. I'm not going to sugarcoat anything for anyone. Not going to make any sense. This market is brutal. So sugarcoating ain't gonna work. I just keep it real. All right. So let's look at some charts here, and see what we're looking at. One of the first things, guys, that you really want to pay attention to is something called. Let's start with support and resistance. I think support and resistance is pretty much one of the basics. Let me just kind of let me open up a new chart here. With It doesn't really matter. Just open up any. Okay, so this is the default version, and you can have different strategies. I'm just going to use simple chart. All right. So let's look at support and resistance. Let me just move some things off my screen, move them around so that I can have some space. Okay, so this particular trade here is USD CAD. What that basically means is that the US dollar versus the Canadian dollar. It's like pairing the US dollar with the Canadian dollar. So which whenever is stronger at the time is the one that's going to be dominant. All right. So you can have USD CAD. Then you can have some trades, some pairs that the USD is at the end. GBP USD, which is like on pounds. Over the US dollar. USD JPY, which is US dollar versus the Japanese yen. You've got NZD, which is New Zealand. You got a lot of different pairs that you can choose from. If I come here, you can see space this up for you. All right, so you can see a lot of stuff there. USD, Euro USD, very very popular one, probably the most popular pair that there is. GBP USD, USD CHF, which is the Swiss francs, Euro JPY, etc., 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 etc. All right. Now, So those are the ticker symbols basically. So when you see me, in the room, you might see me say something like GU. If I said GU would be GBP USD. If you see me, put a trade or put a symbol, and I just said, okay, so we're gonna go along on EU. What would EU be? Well, that would be Euro USD. If you see me say CJ, you know, well, that is CAD JPY. So that's what we do. A lot of traders just kind of call it that way. Most of the guys that I hang with and trade with, that's just how we do it. We don't really call the whole thing out. But if I'm placing trades, placing those signals, I'm going to put the whole thing for you. But if you're just kind of chatting the group about a trade, you might just see me put, something short and simple like that. All right. So just bear that in mind. As time goes on, you kind of get accustomed to it, and you would figure out what is what. I was the first seeing it at first. I heard guys calling these abbreviated things. I'm like, huh? What on earth is that? Until I figured it out. So you're gonna get used to that. Um, so you've got the bid price and the asking price. Basically the difference between what you can buy at and what is being sold at, as well. So bid and ask would basically determine or refer to the buying price and the selling price in a nutshell. Just going to try to keep things as simple and straightforward as humanly possible. So one of the first things that you want to understand, if you're going to be trading forex currencies, you're going to see, you've got different chart patterns. Okay, so this one is what we call a candle or candlesticks, Japanese candlesticks, and they're pretty much the most popular icons that are used or forms that are used. You've got, you can change it like this, and I might not even have all the necessary terminologies for each of these things. It really don't matter. Terminologies don't make me money. You've got the candlesticks, or you've got the line chart, line graph. All right. I use candlesticks and I use line chart. Most persons are going to just use candlesticks. And for you guys who have already opened your account, you can easily right click and come up to properties. And when you come to properties, you can come here, and this is where you change the layout of your grid. All right. You can have the grid with lines and everything through it if you want. You can have you change the color of your bull candles and your bear candles, all these different things we get into as time goes on. All right. So being that I mentioned bull and bear, just so you get an idea as to what these basic things are and what they represent. When you hear anything about bull market or bear market, bull market refers to when the market is an upward trend. If you've got a upward movement, trades and stocks are going up, pairs are going up, so on. You're talking about a bull movement. Or you hear the terminology like, stocks are bullish or trades are bullish. If you hear they're bearish, if it's a bearish trend, then it means that the direction that the trades are going in is on the downward side. So you've got bull and you've got bear, bullish and bearish. All right. So you just want to keep that in mind as well. Very, very important. And we're gonna get a bit more into trend analysis and why that is important. Actually, before we even move on to the other stuff, let's actually deal with that right now. Since we're talking about bullish and bearish, one of the things that you want to understand and make this as a principal rule, you don't ever trade against the trend. Now, what is the trend? The trend basically is the direction, all right, the general direction. So let's look at an example here. We've got the UCAD pulled up. If you were to look at this, as you can see here to the top, you've got M1, M5, M15, M30, H1, H4, D1, W1, and MN. All that basically means is 1 minute time frame, 5 minute time frame, 15 minute, 30 minute, 1 hour, 4 hour, 1 day, 1 week, or month. It's really, really, really important, guys, to understand the difference between the time frames and how to utilize the time frames. Me personally, I use the larger time frames to determine the trend and direction, the general trend. And I use the lower time frames to plot my entry points. Now, some persons trade really long. They might trade over the period of a month. Some may trade, some people scalp and they like to use the 5 minute. Okay. Now, let me show you a couple of things that are really interesting here. If I were to, let me just kind of zoom out here and pull back. All right. If we look here on this 5 minute time frame, come back a bit further, Let me see if you guys are understanding this so far. Now, what we've got here, if we look at the trend, what would you say the trend is based on this time frame? Is it bullish? Is it bearish? What would you call this particular trend direction? Keisha, I see you. I just saw your message. You said you're seeing it blurry. Is that still the case, or is it any better right now? It's okay now. Okay, fantastic, awesome. Okay, so guys, yeah, tell me. So based on this chart right now in this time frame, what pattern are you seeing? Is this bullish or bearish? See if you guys paying attention. Okay, so Keisha says it's bullish. All right. Anyone else? Anyone else wanna? Oh, sorry, that's okay. Okay. Dr. Jai says it's bullish as well. All right. Well, actually, based on this, is actually bearish. And here's the thing. If you only look here, you might say, okay, so it's gone up here, so yeah, it must be bullish. Well, actually, no. If I were to take a trend line and I were to draw a line from here to here, is that up or down? Okay. Draw it from there to there, is that up or down? Exactly. It's down. So if it's down, then it's a bearish. Think of it this way: bulls charge. Bulls, they go forward and they charge. Bears, they hibernate. They go into a cave underground, and they hibernate. Think about it that way. Bulls are charging, so they're going forward. Hence, they're going up. In this case, bears, then they go in caves. They go low. They go underground. So when you think beer, think low. When you think bull, think raging and going forward. All right. So this is actually a downward trend on this time frame. But let's go here. Let's go to a higher time frame. Now this is a H4, which means that this is a 4-hour time frame. In other words, what it means is every candle that you see here represents 4 hours. You guys got that? Every candle represents 4 hours. So basically, if I were to just highlight, say, these 4 candles here, that's actually a day. That's an entire day right there. Okay? 4 candles. Because 4 fours, oh, shoot. My apologies. Sorry, it would be 6 candles, not 4. All right? So 1, 2, 3, 4, 5, 6. All right? Oh, let me just do that again. A different section. So we got 1, 2, 3, 4, 5, 6. Okay. So right here, these 6 candles actually represent an entire day. So just remember that if you're on 5-minute time frame, every candle represents 5 minutes. If you're on the D1, every candle represents 1 day. Okay, so you can actually. Okay, when you say you're seeing some gray blocks on the screen, I not sure what that is. I'm not sure if that is when I draw the blocks, if that is it. Could be, but we're not going to stay on that throughout either way. So that's don't worry about that. All right. Once you guys can see the chart, that's all that really matters. Okay. So just understand that every candle represents. If you're on the day chart, that's 1 day. If you're on the H4, that's 4 hours. If you're on the H1, that's 1 hour. Me personally, I trade primarily on the 1 hour chart. All right. And the reason that I like to trade on the higher time frame charts is because it gives you you're able to read it a whole lot better. You can actually get better readings and do better chart analysis because you see the patterns forming a whole lot better. All right. So just bear that in mind. Now, since we're talking about trend, now before we looked at the trend, it was a downward trend. We go here to the H to the D1. Let's zoom out and see where that's going. Now, this is the D1. What is the trend here? Is it bullish or is it bearish? Bullish or bearish? What is the trend that we're seeing here on this chart? Okay, John Prue says bullish. Sure? All right. Anyone else? All right. Dr. J says bearish. All right. Okay. All right. Bearish. So we've got one bullish, two bearish. All right. Well, here's what we do. Let's pull our trend lines up and see what's happening. So we go from here and it's going up. So bullish or bearish is actually a bullish trend. So you see that it's actually a bullish trend. So on the 5-minute time frame, it would have appeared to be bullish, sorry, bearish. But when you switch to the higher time frame, you realize that it's actually a bullish trend. So you see, it is very, very important to understand this because this could impact your trades tremendously. Because if you're going to place a trade and the general direction of the trend is down, but you go long or you buy, well, we're going to talk about that. You go long. Going long basically means that you're buying it to go up. If you're going to buy a trade to go down, you would say that you're shorting. All right, because generally they go down and they stay down for a shorter period of time than when they're going up. You usually have more upward trend movements. All right, so you're either going long, which means you're buying it to go up, or you are shorting the trade, which means you're expecting it and you're buying it to go down. Okay, and of course, as you see, different time frames can give you different results. Reason why you want to pay attention more so to the higher time frames is because if you trade in the direction that is opposite to the general trend, what you're putting yourself to possibly encounter are a lot of pullbacks in the direction that you don't want, because you're going against the grain. You don't try to go against the grain. If it's going up, you want to trade as much as you can. You want to trade in the upward direction. If the general trend is down, you want to try to place trades that follow the general trend. Does this make sense so far, guys? All right, I hope this makes sense so far. Okay, good. So just always remember that. Never go against the trend. Always trade in the direction of the trend. Okay? All right. So that being covered, let's move on to some other things. We've talked about trend lines and so on. Now, how do you draw trend lines? Now, this is a topic that, there's a lot of up and down about it, whether you should draw trend lines on the outsides, can you go through candles with trend lines and so on. Let's keep it basic for now. We can always cover more stuff in other trainings, all right? So trend lines basically help you to determine what we call support and resistance. Support refers to, that flooring. Think of a foundation or flooring that you come down to, you stand on. It's the lowest point that you believe, is the point at the bottom where the trend or where the candles are going to hit. Resistance is above. Think of resistance like a roof level, where support is like ground floor. All right? It's very, very important to understand support and resistance and how to determine support and resistance, because that is what will help you to determine how long a trade might be trending for, when it may pull back and so on. Really important. So let's kind of just look at support and resistance real quick. So what I would do here, I go over to come over here to the cross, not the cross here, I'll get my trend lines. But what I like to do, I like to use the crosshairs first so they can just kind of do like this. So you see these points here. Now some people call them candlestick wicks, some people call them T-bars, some people call them shadows, some people call them wicks, whatever suits you. But just to give you an idea, if I were to take the crosshair and bring it over here, I can see that here, right? You see you've got a candlestick that the wick went up there. It touched there. The second one here, this green candle, it touched it. This red candle, even though it's red versus green, it touched it. If you come over here, you see that, again, touched it, touched it, touched it. All right, you come all the way over here to the right. Guess what? It still touched it. Right here to the very right, touched it. So what does that tell you? It tells you that that point right there is a level of of resistance. Okay, so as the trend is going up, as the candles are going up, let's just take a trend line. Come here, and we're going to put a horizontal line there. This would represent what we call resistance. Why? Because the candles, the buyers, they want to go higher, they want to go higher, they want to go higher, but as they're going higher, they run out of steam and they butt resistance. Why would they butt resistance? Well, different things in the market, not to mention the sellers. There are sellers out there who want to go low. Okay, so what's happening here? You're butting resistance, 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 and as you butt that resistance, look what happens. Boom, resistance. Boom, drops down. Right. Buyers push it up again. Right, goes about halfway there, down, and then boom, up again. What happens? Hits the resistance level. Back down. It goes up again. Hits the resistance level. Doesn't it? Just barely breaks it. Back down. All the way down here, and that would have been major, major pips. Pips, guys, refer when you hear pips, pips is money. Keeping it simple. All right, the amount of pips you have will determine, or you earn will determine the amount of money that you will generate. If I come here and draw a line from there all the way down here to that point, now this would calculate in points is 53.77. All right, I don't know, about 54. Yeah, about 54.78. Call it 54. So 54.78 in points, that's about 54.78, about 547 pips. All right. Now, if you're doing let's say you're doing a lot size, we're going to talk about lot sizes probably tonight, probably not. But let's say you're doing a small one like 0.1, 547 by 0.1 is 54 US dollars. Okay. Now, as you get better and you start to work with more, bigger lot sizes, like say 0.5 and so on, that same 547 by 0.5 is 273. Major difference. So the amount that you're actually putting in obviously makes a major, major difference in the amount that you're going to earn. But you don't want to get ahead of yourself, all right? So we're not going to deal with that tonight. We're just going to look at a few other basic things. So we've got our resistance line here. But here's the thing. Here's the thing. Now, if that's resistance, what about support? Well, where does the support look like it's lying here? All right. Now, you can draw trend lines one of two ways, guys. You can either use horizontal lines, like what we're doing there. Again, you can take a cross here. You can, just for this chart, you can see, where's the support? The support seems to be around here. And why is the support just around here? Well, I'll tell you why. So we just come here and we just kind of draw a line around there. Now, yeah, it might cross a few things, but here's the thing you want to remember as well, all right? If you notice on the candles, some of them are solid. Like if you look at this big, long, juicy red one here, it's got a very small wick at the top and a very small wick at the bottom. If you look at others, you see, like, for example, here, you've got a long wick there and a long wick there and a long wick there. Right? 3 of these out here got some long wicks. You got to be careful with those wicks. Those wicks are fake moves. Those are fakes. All right? Those are what, when we talk about market makers, those are the guys out there who try to control this market. And they're just trying to collect your money. So what would happen is they throw some fakies out there, man, and you think, you see this you see this going down. You're like, oh man, this is going down, going down, going down. And you're like, good, I'm gonna short this and go down, but then it's a fake move. Boom, it goes down, then it retracts, and then boom, up in the air. I know you're crying. You're like, oh my God, how did I miss that? And you've lost some money. So you gotta watch out for that. You wanna make sure you identify your support and your resistance, but you gotta watch out for the fakies. Now, another way that you can draw trend lines is horizontally. Vertically. Let me just zoom out a little bit. So I can come here, all right, and if I wanted to, let me zoom out a bit more just to give you an idea. So let's say we want to keep on the outside. Yeah, let me keep you guys with the basic stuff. One of the things you want to remember when you're drawing your trend lines, you always try to identify the outward trend line. There are people who will come and draw trend lines all in between here and all in between here, and that's fine. It's based on the kind of trading you want to do. But what you always want to identify is the outward trends. Okay, so like for example, I would come and I would put a trend line right there. Right, let me just kind of move this one here off the screen for now. Okay, and you good, I've already got one here. Okay, so you see what I'm doing here, the outward trend line. So if you look at these trend lines here and look what's happening, right? This is D1. This is, you know, every candle is a day, and you would notice here you've got this movement here. It's coming all the way down here, and it touched it. Boom. All right. Now it retracted. It didn't go all the way up, but look what's happening, and we're gonna talk about this as well. The W's and the M's. All right. Draw. It's just. Oops, I didn't draw that very good at all. Okay, but I just want to show you something here. Boom, 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 and upward movement. I love it. Once you start to understand what to look for, it becomes so much simpler. All right. This is why I love doing this stuff on my phone. But these trend lines just keep going all the way. Either way, maybe I can change the color that so you can see it a little differently. Let's change that to yellow. Okay. All right, and this one here as well. And I want to show you something here. So this one, but he's not drawn straight at all. Okay, good. All right. When you're looking at your trades, guys, you always want to be on the lookout for W's and M's. All right, just remember that. We're going to get into that. But I just want you to get an idea here as to the trend lines and what to look for. The trend and the trades generally try to always touch, okay, the trend lines. Now, if you look at this one, you would see it came here, and it came right down, and it touched. It bounced up here, tethered, kind of went lateral for a bit. And what did it do? Back down. What did it do? Did it go past here? Nope. It touched. Back up again, and guess what? What direction you think it's going to go? It's going to go down, all right? And where do you think it's going to go down to? It's going to go down here and touch. Now think about it. Now that actually gives you a pretty darn good idea as to what could potentially happen with this trade, all right? And you want to look for those patterns, guys, all right? Those W patterns and those M patterns. Let's see if you can find a few more, all right? So let's come from there. Let's look for a few more. And you're going to notice, oops, take this off, take that off. You're going to notice some things. Here's, okay. W's and the M's. Here's a W. Boom, down, up, down, up. All right? And here's the thing. Let me just kind of zone in here and show you something to pay attention to. One of the things with the candlesticks, guys, that is so important is you want to always pay attention to where the candle ends. Is it above the last candle or is it below the last candle? So if you look here, you've got a downtrend here, but you've got a downward movement here, a bearish, boom. All right? After it hit here, let's kind of click this and we can probably go there. All right? All the fakies. Look at all the fakies. Check this out. Check this trend line. Now you might be saying, oh, but there, you know, Ghost, you broke through that candle. But think about it. So it came down here. We draw this trend line here. Boom. One touch. Two touch. This touched it. It broke through here, but guess what? Fake. And look where it actually went back to. Fake. Same thing. All right. Move forward. Touch there. Touch there. All right. Out here. Fake. Solid. All right. So again, check it. Even right up to here, boom, touch there, touch there, touch there, touch there, touch, 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 touch. All right. So you gotta watch this stuff. All right. Come down, back up. Come down, touch, fake out, and go up. So here's the thing. You got this candle here. All right. It goes up, it fakes, back down. The next candle, it starts, it goes up. Yes, it's a fake, but guess what? Here's why trend is so important as well. All right, trend direction. It goes up, it fakes back down, and then we've got a bearish movement. Now the thing about this is, in some cases you might be saying, well, okay, I've got this big bullish movement, so obviously this is going to keep going up, going up, going up, going up. You see these shadows? These are a sign that there's major resistance pushing that particular trade in the opposite direction. So let's think of it this way. This big green candle is going up, going up, going up, going up. Then you get this big fake. This fake is telling you, guess what? The sellers are trying to come in. The sellers are trying to push this back down. So our passes, all right? This is what? This is, okay, day one. Okay, right. So we move on to the next candle. Another green, but guess what? Sellers pushing again. Eventually, the buyers run out of steam and it pushes it right back down. Catch a little energy here. Guess what? Seller try to push it down. But even though you got a little seller here, a little candle try to push it down, your list is a lot of fake, and we call these almost dojis. And there's a little red candle. Now think about it. Is that any significant difference or threat to this? Nope, it's not. So if it's not a threat, just tosses that aside and continues on the way up again. Until they do what? They run out of steam and they back down. Now check this out. I'm pretty sure I can come here and do that. All right. Touch, 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 touch. Support. Check it all over here. Touch, 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 touch. All right. So this tells you that this line is a pretty strong support line at that point in time. So even though it went up, it still came back down, broke it. Try to push above it, went back down and broke it. All right. Are you guys starting to understand this a bit? All right. You got to pay attention not only to, the candles themselves, but you also got to pay attention to the wicks and how each candle ends. All right. The next candle that comes on, where does it start? Is it a major threat to the previous candle? Always look to the left. Okay. All right. Let me just check the chat and see. We've got screen has gone gray. Not hearing me. Oh my goodness. That is so weird. Okay, let me take this off. Not sure if maybe the video may be pulling too much. Can you guys hear me clearly now? Can you see what's happening right now? Just let me know in the chat real quick if you're hearing me and seeing the screen. Okay. I can hear, can't see. Keisha, I'm not sure why you're not seeing. Jam, are you seeing the screen? Want to make sure that everyone can see and hear what's going on. Are you seeing the screen, John Crew? Seeing the screen. Okay. Keisha, I'm not sure why you're not seeing the screen at all. I have no clue. But if others are seeing it, it means that then it's definitely not from my end. Okay. So I'm not sure what to tell you. Maybe you can try logging out and logging back in, perhaps, and see if that helps, see if that works. All right. Now, a couple of things, guys, that you want to look for. Some things that you want to pay attention to is the chart, is the different patterns. There are different patterns that form, and I just want to kind of show you. Let's go here. And I want to show you guys how this thing just kind of bounces. All right. Now, if you check this out, if you check this pattern out here, you see what's happening here. You've got your zones. You see it bouncing off your trend line, your support line, back up, touching, back down, back up, back down, back up, back down, and you realize that it's keeping within that range. And you're gonna find that a lot in different trades as you're looking at your graphs. Okay. You want to look for those patterns. You want to look for those W's. You want to look for those M's. And someone has got their mic on. Yeah. So whoever that person is, can you okay. I think I got it figured out. Okay, so we zoomed in too much and you guys weren't able to see. Let me just zoom back out a bit. Are you guys is it better now? Can you guys see it a bit better? Okay. So let's move on. All right. So before I actually hit that, do you guys understand for the most part how to find your support and how to find your resistance lines? Okay. You look for the upward trend, you look for the outer candles, and you connect. You find 2 points, you collect. 1, 2, go straight through. Just remember that. 1, 2, go straight through. You get 2 points, you connect them, and you draw your trend line. Whether it's bearish, whether it's bullish. Sometimes your support resistance may not be, maybe you use a horizontal line and you place that, but you want to find where that support and where that resistance is at all times. Very, very, very important. Another thing you want to pay attention to and look for is those patterns, and you want to look for those breakup patterns, guys. All right, let's see if we can find some examples here. Let's come off of the day. Let's come down to the hourly chart. All right. So, okay, so here we go. Here's one, right? Let's look for a big one. Okay, so here we go. So you see here, first thing that you want to do, and I want you to kind of make a note of this. The first things that you want to do, and this is what I do for every time I'm going to place a trade. Step one, you go to the daily and the monthly chart, and you identify what the general trend direction is. That's the first thing you want to do. You want to identify what is the general trend direction. Is it up? Is it down? Or in other words, is it bullish or is it bearish? Once you've identified what direction the trend is, the next thing that you want to do is you want to go to, if you're not doing scalping, you're probably looking for a couple of solid trades throughout the day. Again, I like to use the hourly chart, and from there you go to the chart and you plot your trend lines. You find where the support and resistance lines are. Once you found those support and resistance lines, then you can start to look for the patterns within your support and resistance lines. What you would then do is look for those W's, look for those M's, look for those directions, for those patterns. And if you can, I think I put something in the group. Let me see if I can put it. If I can put it here, you know what? I'm not even sure how I would do that. But I'm gonna put it in the group. And what that is would be some charts, some cheat sheets for the most part, that kind of help you to understand what to look for in terms of patterns, retracement patterns, and so on. All right, W patterns, M patterns, breakup patterns, the things that you definitely want to pay very, very close attention to when you're trading. And that is something to keep in mind. Okay, I'm not going to get into things like lot sizes and all of that right now. And the reason for that is, I mean, we will spend the entire night going through all the different things that you need to understand. I'm not going to do that tonight. This is just to give you the absolute basics of trading. I'm actually here looking. Give me 1 second. I'm actually here looking for something for you guys that would. I know I've got it. I've got some stuff here. Okay, here we go. Here we go. I want to show you guys some really important. Where is it? Okay, some really important things to look up for. Here it is. So let me just change the screen share settings from. Let me just change the screen share settings from the way it is to desktop. Okay, so here we go. All right. So can you guys see the photo on my screen? All right. Is everybody seeing this photo that's on my screen? You seeing this for XLG Trade Legend picture? Okay, good. This can show you quite a lot. Now, in every chart, you're gonna find. I'm getting some feedback again. So again, please, if your mic is unmuted, just please go ahead and hit mute. Okay, thanks. Whoever the person was, thank you. All right. So take a really close look at this. I'm actually going to put this into the battle room for you guys, so that you can have this. Keep this close. This shows you all the different things, all the different patterns that you want to be looking for as you're trading. Okay, you see, you've got the M formations, you've got the W formation. If you look at this M formation, what do you realize? It goes, it's up, down, up, and then what? Boom, down again. Form right into a W. So it's coming down, up, down, and then what happens? Shoots up. Now, when you get a trend or you get a trade that is shooting in any particular direction, always expect a pullback. All right, what we call retracement. So it goes up, pull back, goes up, pull back, goes up, and then hits down. Why? Check it. It hit the resistance level. Once it hits that resistance level, expect one of two things can happen. It's either going to break out and shoot right up to another higher resistance level. And what you can then do is you go to a higher time frame to find out what that resistance level may be, or it's gonna reverse and it's gonna come down. So it comes down. Then what happens? Retracement, back down, boom, shoots up, right from the W pattern again, goes right up. So you guys see that. So you've got the support right down here, this line going right across. You've got the resistance going right across. Retracements, you got to watch out for the retracements, guys. What happens with the retracements is people are in trades and they don't get a chance, or I should say they don't get the chance. When the retracement starts to happen, folks get scared and they jump out the trade, lose money. All right? They lose money. What you definitely want to do is you want to, if you miss the movement on the way up, what you do, you wait for the retracement and then you buy low and then you write it back up. I wouldn't do that right here, but more in a case like this. Boom. So this W formation start to happen. Boom, boom, boom. It's going up. And then it starts to pull back. You're like, oh my God, it's pulling back. I'm gonna lose money. Trend has changed, it's going down. No, it's not. All that's happening is it's testing. It's testing. Right? Goes up. Boom. Hits there. Comes back down. Retracement. What do? You want to buy in right at this point right here. In other words, you want to buy wholesale. You don't want to buy retail. You buy it up here, right? Or you buy it, you buy it, it goes up and you miss it. You want to buy it when it comes back down. You don't want to buy in up here and then lose that money and then gotta make it. No, you want to get the absolute best price possible. So if it goes, you miss the first run, wait for the retracement. Boom, or what I like to call the second leg. You come down. As you come down, then you buy at the bottom, whoop, rally it right up. All right? Check it happens again. It retraces. Now, one or two things. Sometimes you may jump out at this point, so you might have a take profit or something set. Not sure I'm going to get into all of that tonight either, but so it hits your take profit level. Take profit really just represents a level that you're saying, hey, you know what? If this trade hits this particular point, I want to jump out to keep all the profit that I've received so far. Or if you're riding the trend, you want to ride it for a longer time, you can see that the formation has not fully happened as yet. It's still heading up to the trend line. Even though there's a retrace, you wouldn't even pay any attention to that. Because guess what? You're not going for that. You're going for when it hits up here. When it hits up here, boom, you take your profit. All right? Because guess what? If you stay in, you're going to start to lose some money. It's going to go down. You just lost a chunk of your money. Don't do that. You can write it from here all the way up. All right? And as that happens, you've got, as it says here, multi-session M and W. So you're getting boom, 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 W. All right? Right there. It goes right up, forms at the end. Up, boom, boom, boom. And there's actually another W there as well. All right? So again, you got to watch for the W's, watch for the M's as well. Let's look here. What is this? Well, this is what we call consolidation. All right? When you're in a trend, any trend or any trade that you're looking at, and you realize that is not much volatility. It's just kind of tethering there. It's not going up big. It's not going down big. It's just kind of settled, just kind of low. Well, guess what? That consolidation period is a very, very dangerous place to trade. As a matter of fact, I would suggest to you right now, don't trade in consolidation periods. We've got the Asian market that does consolidation. You've got you got the London market, you've got the Asian market. I basically trade New York, London, and basically New York and London. Right? So London, I'm up around 3 a.m. in the morning, and I'm setting up my trades and just getting ready to focus on that market. and London kind of goes right into New York, so that kicks in later on, in the day, and then just right into that. All right, and then Asia kind of consolidates. So it's like kind of saying London buys, sells it to New York, then New York just kind of sells it back to Asia. That kind of stuff. Either way, that was another story for another day. So we got your trend lines, support, resistance. You understand? You got the W's. Look for the W and in patterns as you go into your accounts. Open up some charts. Start to practice. Look at some charts and look for those W and in patterns and watch the trend. Watch how they're moving. Watch the breakouts right after on the third leg. All right, one hit, two hit. Remember this. If you got your trend lines drawn, and I know you guys are taking notes, which is good, so remember this. You've got your trend lines drawn, it's going to hit it, okay? It's going to hit it. After it hits it, it's going to retrace. After it retraces, it's going to come back to test it, all right? What we call retesting. So it's going to hit, retest. Check out all of these trades. Boom, right here. Hit, retrace, retest, move. Hit, retrace, retest, move. Okay, you go up here, boom, it hit up here, retrace, retest, okay, consolidate a bit, move right down, consolidate a bit, or you even got some, small volatility in here. All right, if you're a scalper, well, if that's your thing, you want to do some short time frames, and buy here, sell here, buy here, sell here, buy here, sell here, and try to grab all of that. Great, good for you. I used to do that when I was trading like an amateur. I stopped doing that. I just go along for big pips. So, some folks may be looking at this. Oh, let me grab this and grab it from here to there, and from there to there, and from there to there. They want to grab all of that. I'm gonna be like, no, not interested. I'm looking from here all the way down to here. Right? I'm looking for big money. So you've got that consolidation is right here, and after consolidation, what happens? Boom, it dips. All right. Now here's the thing: if the trend direction is a generally a downward trend or bearish trend, after consolidation, you're more likely to have it continue in the overall direction of the trend. All right, just remember that. If you've got consolidation and the trend is generally down or generally up, okay, overall, you're more likely to have the pattern continue in the general direction of the trend when it makes a move again. Let's just kind of bear that in mind. So you see the same thing here again. Boom, it touches, resistance, support. Resistance, touch again, come back down, support. Resistance, touches again, comes back down, and this time it breaks support. All right, test, come back, retest, confirmed, blast off. Comes down, retracement, blast off. Hit support line. Okay, hits back up, okay, retest, back up, retest, blast off. I think you guys are getting it by now. Okay, break, retest, and continuation. Okay, and again, like I said, you also want to be careful for those stop hunts. Those stop hunts again are basically the market makers out there trying to get your money. They're like, so you guys think that this is predictable and you can, exactly what's going to happen. So when you think, this comes down, it goes up, comes down, and then when you think it's going to go right down, you're like, good, nope. It's a trick. It's a trick. Don't fall for it. It doesn't matter. All right? It doesn't matter. It's a trick, stop hunt. And what I was designed to do is to touch your stop losses. A stop loss is basically a trigger that you would put in place to jump you out of a trade to minimize your losses. So let's say, for example, we can actually do a lot of trading right from this one picture actually. So let's say, for example, that you're in a trade and let's say you bought in down here and it's going up, right? So you're expecting to go all the way up, but it could actually tether down here a bit and then go up. You don't know that. It could, So here's the thing. So you bought in here at the bottom on the right leg, of this W. You bought in here, and instead of retracing and going up, let's say it decided to come all the way down, right back down here. Now that could happen. It could happen. News sometimes may come out, and it makes trades do some crazy things. And I'll tell you this, guys, as good as you may be or as good as you read a chart, there's just some things you that just catch you off guard. You're not going to win every trade. You're just not. All you want to do is to win more than you lose. That's what you want to do. You want to have more wins than you have losses. Okay, just always keep that in mind. So here's the thing: if you have a stop loss, your stop loss, you might place it down here, right? Right under that trend line. Now, why would you place it under the trend line? Here's why you would. Now, remember, it's designed to minimize your losses. Some may say, well, why not place it higher so that if it comes back, you still get to keep some profit? Now, you could. That is fine. But again, it depends on the kind of personality that you have in trading. The reason I would probably place it just under the trend line is because it may come down and it's going to hit that trend line and it's going to touch it. Once it touches that trend line, that support, guess what? It may be testing it. So it tests that trend, that support line, and then it may bounce right back up. So it doesn't kick me out of the trade. Now, had I put the stop loss up here, goes up, it comes back a bit, and poof, I'm out of the trade. Yes, I've got the profit from here to here, but I've missed out on all of this movement up there. You see what I'm saying? You missed out on all of that. So you got to have patience. You got to be willing to go into. Listen, guys, I've got trades sometimes that would go $500 deep in the negative. $500 US. Now, before as an amateur trader, I would have been like, "Oh my God, the world is freaking over. I'm done." Right? I feel crushed. But once you are confident about your trade and you've got your triggers set, or you've got your analysis done correctly and properly, you know what you can expect, what you can take. It also depends on your account as well. All right, so you would do that based, use proper risk management. So the thing is, I might leave it because I know that it might be $500 in the negative right now, but $500 in red doesn't mean $500 in losses. I've had a trade that was 800 and something US dollars in the red, like in negative 800 and something. I looked at my analysis, went higher time frames, realized that, you know what, this trade actually will still go back up. It will go up. I bought it long, and switched up on me, and it went short. It went down. I was 800 something bucks. I was tempted to close it, but then I said, oh, hell no. I ain't giving up that money so easy. Let it ride, right? Went to bed, woke up, about 300 or 400 US dollars in profit. So I literally removed all my losses and put me a couple $100 into profit. You've got to be patient. You got to remember that patience is absolute key in doing this. Okay. Okay, good. So everyone says that makes sense. Everybody understands. So far so good. Everybody understands the retracements. Everybody understands, the importance of understanding where to place your trend lines and for your support, your resistance, and so on. Is critical. Don't just jump in a trade and say, oh my God, there's a big candle going down. Let me just jump in it. Let me explain something that can happen. You may purchase a trade. Let's say you went, you went long on a trade. You bought it to go up. And as soon as you bought that trade to go up, right, the trade decides to reverse on you and it starts to go down. Oh my goodness. So it's going down. So now you're seeing the negative numbers popping up. Here's what most people do, and this is how they lose even more money. They chase the trade. So they're like, oh my goodness, it's going down. Let me jump in and try to buy it on the way down. Well, it may not always work out the way you want. Yeah, I'll admit there are times where it may switch and it may continue to go down. You've jumped in on the downside. What you would just do, you call it hedging. So you've got one trade that is, long. You've got one trade that is short, and eventually the one that is going short would actually can cover the losses of the one that is going long, kinda, because the further down it goes, the more profit you make on the short, but the more losses you make on the long trade. So eventually, if you realize, you know what, this trade is heading down, heading down, heading down, shut off the other one, close that trade, and just hold profits. Eventually, then you just make enough to cover your losses and hopefully make some profit. Yeah, it can happen. But here's what can also happen. You may chase that trade heading down, and then it just kind of stalls there. It kind of stalls, and it may start to go back up, but it doesn't go all the way back up. So now what's happening is you're kind of stuck in the middle. So you're in negative on the buy, and you're also in negative on the sell. Now that really sucks. It can only go up or down, and you actually have a trade going up and a trade going down, and both of them are in the negative. Sounds crazy, right? But that's what can happen, guys. Do not ever chase trades. That is how you will lose a lot of money. All right. I'm just telling you what I know from what I've done myself before when I was in my learning process, and I lost a lot of money doing that. All right. So just always keep that in mind. When you're trading. Okay. So couple other things. Now we're not really going to get into indicators too much tonight. Like I said, this is just the first intro webinar, and I really did it like I promised. I don't want to go too deep. Into this training this evening. But I just want to make sure you guys have the basics. Now, here's what is going to be happening with the group, guys. As you would know, most of you are already in the battle room. The battle room is where we're going to, that's where we're going to turn up. That's where we're going to have our fun. That's where we're gonna discuss everything Forex related. That is where you can post winning trades, losing trades if you want, discuss trades that are happening, potential trades that you might be looking at as well. I have absolutely no problem if other persons from other businesses or companies or other traders from other. I have no problem with persons joining the group. And if you want to trade, trade. My only thing is don't come into my group and try to recruit anybody into anything. If you do that, you will be banned and deleted. I ain't asking no questions. I'm not even going to warn you. It's already right there. The first thing that you see when you join the group is a message. When you click on the pinned messages, it says don't do it. It's right there at the bottom. So I'm not even giving you even any more warning. All right? Recruit, try to do that crap, I'm going to kick you out. All right? And ban you. Don't want your ass in there no more. All right? Also, if you're negative in my group, you're gone. Don't bring no negative vibes in that group at all. You will be gone. Thirdly, don't bring no idiots into the group. So if you're going to invite folks into the group and those folks are going to bring bad vibes, they may be gone and you may be gone too. All right? We only want key solid people in the group. If you understand trading, great. Not a problem. And feel free to share. We're gonna be sharing stuff all through the group. But once you subscribe, what you're gonna be getting is signals directly from myself. And probably in time we may look at actually allowing other traders to post some signals in there as well outside of the group that you guys can tap into. There's some other things that we're working on in the background. I won't get deep into that, but it's actually just to give you an idea, a trade copier that will allow you guys to, if you so desire, you can have that, and as I place trades, it will automatically place trades for you guys as well. Just kind of it's pretty awesome. But like I said, that is down the road. We're not looking at that just yet. We're just kind of getting out the gates here of this. So yeah, make sure that you're definitely subscribed to get the information. Make sure that you get your account set up. All the information to set up the account is already posted in, when you register, it's already there. You go right ahead, click on the pin message to the top in the group, and you're going to see the broker, the link to register for the broker. I got to add one more thing to that, and that is, you're going to use an ECN account. Persons keep asking me which one to choose. We're not trading crypto. That's another question I received. We're not trading crypto as yet. Crypto is really volatile, and it could be kind of dangerous. And I just want to kind of keep it basic and simple for the folks for the time being. Oh, wait a minute. Am I sharing my screen still? Yes, I am. Okay, good. Yeah. So I want to make sure that folks understand the basics of the trading first before we go into trading crypto and so on. We're just going to trade pairs right now. Okay. Okay. Keisha says she doesn't have the time for negative. That would be great. Okay, fantastic. Fantastic. That's exactly what we're looking at. No negativity at all. Another thing to understand, guys, is this group was designed and put together specifically for those folks who do not want to have the pressure of having to recruit. Okay. A lot of pressure. A lot of people have come to me and said that they did a bit of trading, but there's this pressure with other things to recruit and build a team and so on, and they didn't like that. I know a guy right now. He's a exceptional trader, and he left a company. Obviously I wouldn't say what company I'm referring to, because I'm not even about that. It really doesn't matter. There's some good companies out there with really good information, really good training, and really good tools as well. It's just that most people can't afford it. That's the reality of it. They just can't afford it. But I will never shoot down any other company because, a lot of them they're good. They're really really good. It's just they're too darn expensive. you know. But this guy was telling me about he was one of he's a top trader, man, and he told these top guys. He said, "Look, I like this company. I want to do this, but I just want to trade." And the reason that he left, yes, he left because he said, "You know what, Vera, even though I'm trying to just trade, I mean, there's this constant pressure to recruit." And he wasn't about that. He just wanted to trade in peace. So this group is for those folks, those of you who just want to trade, who want to learn how to trade and make money trading from home without having to, to have or feel that pressure of having to build a team. Also, without having that pressure of a high monthly maintenance cost as well. Okay. So I hope that is good for you guys. Now, as I was mentioning with the subscription, what I'm going to do on a daily basis once we kick that off is you're going to see getting some feedback here. Okay, Kyle or Kylie, yeah, your mic was unmuted. Okay, so as I was saying, what we're going to do with the group is every day I'm going to post some setups for you guys that you can literally take those setups, and if you're using a demo account, you can take them, paste them into your own demo account and write those and kind of test it out. Just get a feel for it. If you're not ready to trade with actual money, then don't. I do not suggest that. If you are going to trade with actual money, do not invest more than you can afford to lose. Do not take up your life savings and put it into the Forex market all at once and believe that in a month you're going to become a millionaire. It does not work that way. This takes practice, it takes time, and it takes a tremendous amount of patience. If you don't have that, this is not for you. You have to have patience. All right. Now, in terms of costing and everything, right now it is 50 US dollars a month. There was a suggestion put to me to offer packages, bigger packages, where a person can pay for a couple of months at a time. I was considering it, but I decided to forget that and just keep it low for now at just $50 a month. Very, very affordable. For those of you who have some experience in trading, you know that with $50 you can make that in one single trade. You can make that in a couple of minutes. You can make that in a couple of seconds, even depending on what you're trading, how you're trading, and the lot size that you're using. So it is not expensive. Currently, I'm allowing person even register and just pay $30 up until Saturday night. And then we're going to just keep it at just 50. In time, that is going to increase, and of course, when we add the other tools that we're going to bring, that may increase as well. By that time, we're going to have a lot of persons who are already into making money, ton of testimonials. I'm just excited for that, for sure. I can't wait to see you guys actually start to make some money. Yeah, and that's what it is. So 3 to 5 signals every day. You never know. Some days I might just be in a good mood. I might do more, and you might get more signals than that. I don't think you need more, because here's why. Really and truly, you don't need to do, if you're trading long, if you're trading hourly charts or daily charts or H4, you don't need a ton of trades through the day. You don't need to be sitting down in front of the computer 24/7 watching this thing to see, is it going up, is it going down, is it going up, is it going down. That is brutal. All right. If you've got the time to do that, you want to sit in front of the computer and burn your eyeballs out the entire day. Hey, that's up to you. Have fun. Trade hard, trade big. But that's not how I trade. I go for big money. I go for big pips, and I set it and put the things in place to allow it to run. Put the things in place that if I want it to stop, it can stop. All right. I think I'm gonna shut this down real soon. I see it's just after 9. So the last thing I'm gonna cover here, since I know that some of you guys are taking notes. Let's talk about things like stop losses and trailing stops and that kind of thing. So there are a couple of different terminologies that you want to get familiar with. One being what we call a stop loss. Let me give you an example. If I were to try to open this trade here, and it said new order, all right. So you see here market execution. Market execution just basically means that I want to buy this particular pair at whatever price the market is selling at right now, right now. So as you can see here, this particular pair, market price, if I'm selling it, if I want to go short, 1.27658. All right. Or market, or if I want to buy 1.27657. Okay, so I can buy at market price right now by clicking market execution. However, if I want to, and of course my lot size, we're not going to get into lots tonight at all. All right, another time. Plus, there's a lot of information on that either way. Probably don't even need to get into that. I really want you guys to do some research and learn on your own as well. Another thing you can do, I can hit pending order. When I click pending order, let's kind of look at these real quick. You see, you've got buy limit, sell limit, buy stop, and sell stop. What do those mean? Let's start from the bottom and come up. Well, if you do a sell stop, it means that you're saying, in a nutshell, if you want or you expect this particular trade to go down. Now, let's say right now this line right here to the right, 1.27645. This is where the price is right now. And you're saying, I believe that this price is going to come down to this price is going to come down to here. All right, we see my crosshairs, but it's not there yet. So you can say, well, I want to put a pending order for a sell stop right here. So what's going to happen is this trade is, if it does come down, it's going to hit that point. From the time it hits your particular trigger or hits that amount, boom, it puts you into the trade. All right. Now, on the flip side, you can have a pending order for a buy stop. A buy stop is if the trade is here, but you believe that the trade is likely to go up. Boom. So you want to set it right here at 1.27831. You want to set it right there. Well, this is telling the trade, this is telling the system, if the price of this trade goes up and hits this point, that is when I want you to put me in the trade automatically. You might not even be home. You might not be available, but it's going to do it automatically for you. Okay? Then you've got, what's next? Sell limit. A sell limit works where, let's say that you've got okay, so the trade is right here, 1.27827, and you believe that you want to buy it to go up. All right. But let's kind of switch that. Okay, let's say it's going up and you want it to, you believe it's going to go up and then come back down. The sell limit says, well, hey, if it hits this particular point, it kind of goes over that. When it goes over that, crosses that, put me in the trade because I believe it's going to come back down. Buy limit is pretty much the same thing. Okay, it's going to pass a certain point, pass the certain point. Once it passes that certain point and then reverses, put you in the trade. Okay, because you believe there's going to be a reversal. Then you've got what else we got here? We've got pending order, market order. Okay, up here you've got stop loss, we've got take profit. What is a stop loss? Stop loss basically says if you're right here where the trade is, and as you can see right now, this is coming down, coming down, coming down. So let's say that you bought it to come down, so you shorted this, and let's say it did come down to probably here. And you're like, oh, okay, great, I'm in profit, I'm making money, but for whatever reason, it started to go back up. Well, you would have bought it right, if you bought it right here at 1.2765, you stop loss, you can set it just beyond that, which means if it comes back to the point where you bought in, if it goes beyond that, okay, your stop loss could be set, 15 pips, 20 pips, 10 pips. It's really up to you. That basically, in a nutshell, is telling the system, I want that in the event that it comes a little bit behind or a little bit further than where I bought in, I'm willing to lose at least a $10, a $20, a $30. I'm willing to lose that. But you see, the thing is, you always want to remember, you want to give the trade a space to breathe. It may go, remember retracements, it may come back, but then it may shoot back in the direction you want. So if you set your stop loss too close, it kicks you out of the trade and you're just out. Yeah. And probably in loss. So apart from the stop loss, you've got take profit. The take profit basically means, again, if you're right here, 1.27629, and you believe that this is going to come down, you believe it's going to come down to 1.27447 down here, you can set a take profit, which basically tells the system, hey, if this trade hits this particular point, I want you to close the trade and take all the profit that I've accumulated so far. You see what I'm saying? Pretty cool, right? And finally, it's not on here, but I'll tell you about this other one. I kind of like this. It's called a trailing stop. A trailing stop basically means if you've got a trade, let's say again, you're looking at this very trade in front of us. It's coming down. As you can see, it's forming. It's coming down. It's coming down. All right. As it's coming down, you can say, I want you to trail behind this particular candle or trade behind this particular trade that I'm in or pair. And I want you to trail behind by 20 pips. What that basically is telling the system is, hey, I want you to trail behind this pair. Now, if it keeps going in the direction I want, which means the profit is getting more, that's good. Keep following it. Ghost it, right? I like to call it ghosting. But you trail behind it, basically is what it is, really. But I call it ghosting. So, you're ghosting this trade, you're trailing behind it, 20 pips behind. You ever watch those movies, you got the cop, and he's cops are following a criminal or detectives following a criminal, and they're just tagging him, they're just kind of trailing behind. And they can't get too close, because if they get too close, the criminal might see them and, they get away. And it's all over, right? But they trail enough distance behind that they give it some breathing space, so they're safe. So what you do here with the trailing stop is you trail behind. So if you're now at say $50 and you set a trailing stop, let's say that would put you, I'm just going to use figures so it's easy for everyone to understand. You use a trailing stop that would leave your profit at $30. So which means that you're trailing $20 behind your current trade. You guys with me? So you're in profit by $50. You're trailing behind by $20, which means that if it falls back by $20, you are going to be left with $30 profit. Now, if that happens, you get the $30 and you're kicked out of the trade. However, if it moves from $50 to say $90, because you have set it to trail by $20, it means that when you make 90, 20 from 90 is what? 70. So now you're still trailing. It's kind of like a trailing stop, that stop loss that moves with the trail. I love it. Yeah. So it follows it so that if the price goes in the direction you want and you get more and more profit, you can actually grab majority of it, because it's not going to retrace right back and you're going to lose all that profit. It trails behind it. So if it does come back, it kicks you out, yeah, but you would have still grabbed a big chunk of your profit. But if it keeps going the way you want, it keeps moving up with it, which means that you can actually grab more and more profit as you go on. All right. I hope that makes sense to you guys. Feel free to ask me questions if you wish. But guys, it's 9:30 right now. I really don't want to go past 9:30. That's an hour and a half that we would have been here on the webinar. Time flies so fast. Yeah. But I hope that just this short insight into some of the basics, the basics of fundamentals of trading has helped you guys. Do you guys feel like you've learned anything tonight? Anything new? Do you feel like this information was helpful? By all means, let me know. Let me know in the group how you feel about the training tonight. Again, I didn't even go deep. I just covered the absolute basics. But I just want to let me check the group out, see what you guys are saying, get some feedback. Um, okay. Keisha says she's learned. Yes. All right. Me too. Most important. Fantastic. Fantastic. Yeah, it's really, really important, guys, that you understand these things. And again, there's a tremendous amount of information in the group, in the battle room that you can access and tap into. And every single day you can continue to learn. We've got some other traders in the room. We've got guys like, Declan, is a trader. Just from the way he talks, I can tell that he knows his stuff. We've got some other folks that have some experience in trading. Winfield, Dr. Jai, I know Tanya as well. Just joined today. I know she's had some experience. And I know there are many other folks that have an interest in learning how to do this. You guys would have seen some of my results. Like yesterday, you would have seen that I had a day. I did about altogether about $1,500 US, and that was done by 11 o'clock in the morning. By the way, that wasn't even a whole day. That was just by 11 a.m. By 6 p.m. I was already a couple $100 in profit. By 11, it was over 1100. A few hours after that, it's over about 1500 between my different accounts. Some of you guys who are in the group, you would have seen what happened just before we had your webinar. I was just here, just kind of preparing, just kind of going over, what I'm going to discuss with you guys. Hopped in the trade, looked at it, analyzed it, knocked off another cool $250 in like 5 minutes, right? Um, that's pretty good. I mean, think about it. What if you could generate an extra $200 every single day? Could that change your life? Could that do anything significant for you? Could that help you to live the kind of lifestyle you want? How about an extra, $300, $400? I'm glad that I did it and posted it at the same time and let you guys see that, because it's one thing to talk about, hey, you can do this, you can do that. But I was glad that before, we started the webinar, I was actually able to just do that like right there live and I actually did a video. I was actually doing a video, but then someone called and, I didn't want all of that to be in the video. So I just forgot about it. Otherwise, you guys would have seen me when I, placed a trade, saw the numbers starting to rack up, everything, the whole process. So I was glad that you guys could see me do that right before we actually had this webinar. 250 US on one account, another account, another 109, $110, and that was within a 5 to 10 minute period, right? So it can happen fast. It can happen fast. All right. So with that being said, guys, again, research, study. Check the information in the group that I posted. I'm going to continue to post information in the battle room for you. Just make sure you follow that. If you got any questions, hit me up. We're gonna definitely do, for those who have subscribed, we're gonna do some live trading in the Zoom room every now and then. So that's gonna be exciting. I know that's gonna be exciting. That's gonna be fun, man. We're gonna hook up, have some groups, and we're gonna do some live trading sessions, and you guys can see exactly what I'm doing and exactly which trades I'm placing. Take those trades and place them in your own account, and just wait for them to kick off, man. And that's gonna be exciting. If you haven't subscribed us yet, make sure to get that done and out the way, so I can get you added to the group, to the private channel, and we take it from there. All right. So that being said, guys, again, I had a fantastic time, fantastic webinar. I'm glad to see that you guys learned some information from this as well. Deeper, more in-depth information will come as we go on, but I was trying my best to keep this short and cover as much basics as I possibly could with you. So we'll talk some more in the battle room. Again, in terms of sharing this video, well, it's up to you. You can. I have no problem with that. It's not really deep into anything either way. So it's really up to the individual. But definitely make sure you go ahead, get your accounts verified. Open your accounts, get them verified. You need 2 pieces of ID, photo ID, and proof of address. Get that sent off, get verified, so that you can start using your demo accounts. Or I know some of you have actually put real money in already. Some small amounts to kind of test with. It's up to you, no problem. I'll tell you this straight up. I'll be honest with you. I never did much demo trading, and some persons will tell you Always make sure you do demo first, and that's fine. I know those who know me know that I'm a big risk taker. Most persons know that about me. Um, so don't necessarily do that. If you're not comfortable, don't do it. Don't do it if you're not comfortable. And I'll tell you why that I'll give you the reason for it. Why I actually didn't do a lot of demo trading when I first started. The reason really for that was because when you're trading on a demo account, your emotions are attached to it because you're not using your own money. One of the biggest failures or one of the biggest issues that people have in trading forex is emotions. The emotions get caught up in a trade, and if you're trading with emotion, you will not make money. You will lose a tremendous amount of money if you trade with emotions. All right. See, when you're using a demo account, you got $1 million in there, that fake money, 100,000, whatever, 5 million. So you do all kinds of crazy stuff. You buy huge lots at a time, and you're like, oh my god, I made $1,000. Yeah, but you wouldn't have done that normally. So or you just do crazy stuff, and you're not emotionally attached because it's not real money. When you get into live trading, oh my goodness, emotions kick in, and you don't do the same things that you would have done before on the demo. I wanted the real experience. I wanted to know exactly. I wanted to make the mistakes. I knew that I was going to lose money. I wanted to make those mistakes because I know if I make enough mistakes, eventually I have bounds to learn what not to do. But again, that is me. I don't encourage persons if they're not comfortable to just jump into a live account trading at all. I would not suggest that because everyone is not me. Everyone is not going to do what I do, kind of crazy stuff that I would do, right? But I'll tell you this, and I want you to take note of this point. My trading results made a drastic turnaround in terms of my win ratio when I stopped trading wildly. I used to jump behind every trade, scalping like crazy. Everything I want to jump in, every trade, buy, sell, or buy or sell. Yeah, this is going up, buy it. This is going down, great, jump in, sell. Nah, I trade two to three pairs at a time. Sometimes just two. Some days, if it's a really good pair, I just trade one, but I go big on that one. You know what I'm saying? So you gotta understand what kind of trader you want to be. You gotta understand what you can do with your schedule as well, and you gotta respect your account. You gotta respect the markets, because the markets are not gonna respect you. They don't care. They do not care. They will beat you down, take all your money, and leave you crying. Trust me. So you gotta respect the markets, man, and respect the fundamentals. Don't trade wildly. Don't chase trades. Don't invest more than you can afford to lose. Don't do any of that stuff. For those persons that have been asking me about trading for them and managing their accounts and that kind of stuff, if I do, I'm probably gonna do it, but for just a few persons, not for a huge amount of people at any point in time, because there's only so many charts that I can watch at a time. When I'm finished setting up my dungeon, yeah, I'm gonna have a dungeon. I'm gonna call it that perhaps. Where I'm looking to have about 3 or 4 screens, big screens, all around me, and I'm gonna be I'm really gonna be kicking ass at that point. But right now, on before I get to that stage, I don't want to do too many. But I know a couple persons have asked me to manage their accounts for them. If you're interested in that, hit me up privately. I will be working with some minimums and some maximums as well. So don't think, hey, Laverne, I got $100. Can you? Nope, not working with that. Nope. Minimum is probably going to be 500. I was had a conversation with my mentor today. He does the same thing as well, and he has some $100,000 accounts that he's managing, some $50,000 accounts he's managing, and minimum he works with is $1,000 US minimum, and I'm going to work with 500. I know folks may not, everyone won't be able to do 1,000 for sure, so just going to keep it lower, and that does take time. That's some responsibility. So I understand that there's some fees to it as well. Again, hit me privately if you have an interest in that, and we can discuss that. I'll tell you how that is going to play out. But yeah, outside of that, guys, trade hard, trade good, trade smart, make money. Live to see another day. I'll see you guys back in the battle room. Have a good night. God bless. I hope you learned a lot tonight. And this is going to be a fantastic, fantastic month and a fantastic, fantastic year. We're going to make some serious money, guys. Invite others into the room as well. Let's get the energy flowing. Keep it positive. Get that, get that excitement in there. Not hype, excitement. And we just help folks win. Really, we just help folks win and just win big. All right. That being said, have a good night, guys. And that officially ends our webinar for this evening. Bye bye.